Good evening. This is the Elliott Wave update for the NASDAQ 100 for Monday, June 13th, 2022. The downside did continue to kick in today. It began during the Globex session, well, actually pretty much from the start of the Globex session, last evening, yesterday afternoon, depending on where you live, and just picked up steam and really started to break down again in today's session, even though we had a lot of buy orders right on the opening here in the US, which provided for some interesting entry levels for shorts, as I had suggested on last night's update. Nonetheless, nothing really to make any changes here on our daily chart. I continue to look at this as a C wave now. That was the one change that I made yesterday. A C wave down, and the C wave began at 15,305. And this is all, again, basis the September contract. So we're going to have a little few differences in prices because of the difference between the June and the September contract. If I go out to the weekly chart, they all get blended in. But here we do have a difference. So from 15,305, that's where this C wave began. Again, thus far, I believe we have completed minor wave 1 and minor wave 2. And now we're dropping in that minor third wave. Again, longest and the strongest out of the impulse sequence, which is going to be waves 1, 3, and 5. And we're in wave 3. So we've seen 2, 3 larger gaps lower, or larger, stronger moves down, we'll say. And that continues to be a part of wave 3 of 3. So like minor third, and within it, a minute third. So we have the 3 of 3 going, and this is exactly what I look for. I look for point of recognition, acceleration lower, that point of realization that we're going down. Now, I want to show you that, and they did pull them back up, but the 30-year bond was down over 3 points heading into the close today. And that kind of happened after there was an announcement on CNBC that the Fed will raise 3/4 of a basis point on Wednesday. And suddenly that's going to be the great surprise to everybody. And I always find that kind of interesting, but hey, trading is trading. And this is what we got. So it continues to just fall in line that the reality is inflation is out of control right now, and that the Fed is truly behind the whole process and getting it together to tighten up money. And to do that really chokes off many different parts of the economy, but it's going to be necessary if we ever hope to come back up out of this in any kind of condition. Now, tomorrow we have PPI, and it comes again at that magic 8:30 a.m. Eastern and 5:30 a.m. Pacific. And so this is what everybody's going to hang their hat on in terms of putting the nail in, whatever you want to call it, for the FOMC meeting, which begins tomorrow. And we get the announcement on Wednesday. So FOMC meeting begins tomorrow. PPI comes in before the market opens. It could set the tone once again. We all know the story on the CPI figure on last Friday. PPI tomorrow. So, and then FOMC at 2 p.m. Eastern on Wednesday. So a busy week in terms of major stuff coming out. Then we're just progressing further into the week. We have jobless claims, housing starts, and the Philly Fed all on Thursday prior to the opening. And then on Friday, we have a quadruple witching, which is an options expiration, quarterly, monthly, huge. It's a big expiration. That comes on Friday, as well as industrial production. Also, everything you see labeled or just dotted with red, those are the market movers. That's what they determine will move the market. And we already know, yep, they sure will. So that's the balance of what we have to look forward to for the balance of this week. And I don't necessarily see anything in there that's going to throw this ray of hope, this ray of bullishness back into the market. So I am going to continue to look for this third wave to continue. Now, where and how are we progressing within that third wave? Taking a look here, let's drop it down to the hourly chart. You can see it was quite extensive. We had plenty of upside though, all that green, those are upside moves. Nothing to really shake a stick at or go like, holy cow, did you see that buyback? As I just didn't really happen. So, but they were tradable. And like I had mentioned during last night's update, worth the scalp in many cases. You know, if you're savvy and you're quick, you can go in and you can scalp it and to the upside. So you buy it and then, you scalp it and then you're getting into your next levels where you're looking for additional downside. So all in all, though, I will say it was a very good trading day, extremely profitable. And that's on the basis that I wasn't bullish, I wasn't bearish, I traded the price action, I used my moving averages, I used all of the tools that I have set up for myself to guide my trades and to provide me stronger signals about what is actually happening in front of me. So moving on, I have put a few additional labeling on here to try to put some structure to what we're doing and how much further down we may have to go before we complete the minor three, the minute three, and then get a minute 4 and then a minute 5 to complete this minor 3, which of course started right there. So what we continue to look for is additional downside. I am feeling right now that, again, see, we're into this black hole. And if you noticed, it drops pretty quick. We don't have any price support within the market to pick a point and go, yeah, that low, that should be price support. And it was briefly. And then it came up, gave it a good test this morning, as much as they tried. And that just provided the next entry to sell it. So we actually broke below briefly, but we broke below 11,300. So we're continuing to work our way down towards 11,093. That's the next fib support line. And I think that we'll actually drift below 11,000 before we finish up with the minute wave 3, setting the stage for a minute 4th wave. And once that happens, we'll put in some fib retracements. But again, the strength of the selling may truly limit how far we can get before the next shoe drops. So if we reach a level tomorrow where we can count 5 to complete the minute 3, we continue to have a minute 4 and then a minute 5. And I would already, folks, anticipate that that minute 5th wave will subdivide into a clean 5-wave structure, similar to how this third is subdividing. Not, I would think, smaller, but still subdivide all the way down. And I'm still looking, honestly, for the minor 3rd, right? So we have, again, finishing up the minute 3, get a minute 4, come back down. I am looking for sub 10,000. We have potential to get all the way down to here. we've got some serious things coming that could really affect getting out. In other words, just the sellers swarm and get out. They're just going to get out. If you've not had the experience of just being in a market where you're just watching sell, 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 sell. If you traded the first pandemic drive lower, which was 3 weeks in February of 2020, it moved real quick. Those were the days. I mean, today, the Dow at one point was down over 1,000. They just bought it back up. And that's kind of just how they do it. Because to leave it down like that just really could bring in many, many more sellers. It's just as signals. And so if anybody big or anybody who needs to buy or wants it higher, wants to salvage anything, they're going to have to get it away from a lot of these points that drive the market. So what am I looking for tomorrow? Again, I think upside will be limited. Now, and don't get me wrong, because the upside was limited on the opening this morning here in the NASDAQ, but it just managed because there was the same ones that were buying were likely stacked up with their sell orders and they were coming next. But first they had to push in all these buy orders. So you're like, interesting. We're down 500, but yet they're going to push this thing up to get it back above 11,500. And they did. And then we died. So I can't say that that wouldn't happen again tomorrow morning, but I believe that we need to get down and finish. Let me do this so that I can open that up and put this open like this. If this is the 4, then we're into, again, we're in that 5th, 1, 2. We're in the 3rd. The 3rd has plenty of room. I'm looking for it to come down and get below there. And then a 4 and a 5, and then be done somewhere down in here. Then I'm going to put my label on, minute wave 3. Then I get another 4 and another 5. We've got all of this to deal with. Black hole, black hole, black hole, and then suddenly we're sub 10,000. And it can happen pretty quickly. It truly can. We were down. The NASDAQ finished down down 507, 508. It was down more. It had gotten down to 11,285. So it was down an additional 80. It was down almost 600 points. If we go back to March of 2020, that is when we saw the NASDAQ down 800 in a day. So what's to say we couldn't see that again? Nothing. Nothing says we couldn't see that again. So if we keep all the possibilities alive, we're down, down here. That is an area that I think could complete the minute 3. The minor 3, I'm continuing to look for below, because we still have too much left to unfold that we're going to get here and we're just going to start to rally. Now, remember, when we're done with all of these minors, and like minor 3, minor 4, minor 5, and minor 5 can get us down to here or possibly lower, well, then we're setting the stage for a completion of a primary degree A wave, and then we're going to get a primary degree B wave, and it should launch higher. When that thing gets announced, like, okay, this part is done, and we just lift. I'm not 100% certain, but I'm really up there giving it very high probability that we'll get a V bottom. We've seen them before. We saw it in we saw it in 2020, excuse me. We've seen it in these sequences more recently. We get a V bottom and they just launch. And that's what I think we would get. But it's going to take a lot of guts to do it, because we're going to be just walking through some pretty serious bear market news. If PPI doesn't come out, which I'm suspecting it's not going to show us, oh yeah, on a producer level, inflation is just all hunky-dory. We're okay. I don't believe that. I think it's going to show that it's massively, massively higher. And then we have the expiration and the Fed, excuse me, we have that tomorrow, Fed on Wednesday. So that one's going to be a biggie. Now, if they're really ready to push it down as hard as they did today, particularly in those bonds, on that they're going to, instead of coming out with a 0.5 point, they're going to come over 3/4 of a point. Well, geez, what if they say a full point? Because that cannot be off the table. If you're a Fed governor and you're sitting around the table, we're like, well, we really don't want to upset the market. We really don't want to upset this group or that group or that group. It's like, really? How about you don't want to upset us, the consumer? We're the ones that are having to go pay over almost $7 a gallon here in California. And if you go up to Northern California, some of the remote coastal areas like Mendocino, it's $9 a gallon. We're screaming, help, help. We're drowning and trying to fill our tanks. And then we buy the gas and it's now $120 to fill up your small car. You go to the grocery store and what used to cost you $40 is now cost you $120. So inflation is real, folks, and it's cutting into the economy and it's cutting into people that really can't afford it. So recognize the signs. And even if you're sitting flush and you're doing great, it's going to have its impact on you. You will feel it. It's real. So I'm looking for lower to finish up the sequences and then to put in a low for the minute 3, get a little bit of a minute 4 going, get that in, minute 5, finish minor 3. Then we still have a minor 4 and then a minor 5. And that minor 5th wave could be nasty, So I don't know if we'll get it all done this week, but that might just carry over into next week. We'll see. We're taking it day by day. Trade what's in front of you. Continue to just truly trade what's in front of you. Again, don't get stuck in a bad position. Please don't get stuck in a bad position. It's going to destroy many accounts. You're going to have to confront whatever it is. And if you're stuck, you got to get out. Because to sit in a bad position, you're just going to look and go, oh my God, I'm losing. It's going to turn around. I know it. The second I cover this thing, it's going to turn around. Well, to get to that point, you've missed thousands of dollars worth of trades while you're sitting there walking your own wall of worry to the downside. That's my point. When you get into a trade because you believe that the market's going to flip and turn and go higher, and it doesn't, pick your point where that trade becomes invalidated. Then get out of the trade, review the market. Most likely, you're going to want to join the party. And joining the party could be writing it down. You'll make your loss back and then some by continuing to participate to what's happening in front of you. If the market's going to truly just put in a more sustainable, stronger rally phase, you'll know, then you get in. But please don't try and pick a bottom here. The market's not ready to bottom. That's my honest opinion. The market is not ready to bottom. So to try to pick it, you've heard the saying, folks, why attempt to catch a falling knife? As you're just going to cut off your fingers. So having said that, I'm looking for additional downside. Rallies, I still believe, will be controlled. Again, here we are today. Check it out, hourly chart. That 20 did not get challenged. Did not get challenged. It broke above the 8 once, and that was this morning. 20, nope, didn't get challenged. So we continue to look for the 4 and the 8 to kind of put the caps on these little bounces. And if it kind of gets through, then, well, yeah, a little bit bigger bounce. If it's going to be on a minute level, yeah, I'll probably looking for the 20. but I'm not looking right now for a stronger break and heading towards the 50 or the 200. I'm just not looking for that right now. That would be a surprise to me. Can it happen? I guess. But I'm looking at what we still got to confront news-wise. So I don't know. All right, I'm going to leave it there. Use the tools that you have. If you work with different indicators and you understand those indicators and you trust those indicators, use them. Believe what they're telling you. That's why you've gotten this far. And continue to trade smart. Our next update will be on Tuesday, the 14th.